Insurance means two opposite things, and which one you get is decided by a single number, the size of your pile of shinies. For the broke caveman, it's a tax, something he's forced to buy, charged the most for, and can barely collect on. For the ultra-rich caveman, it's not protection at all. It's the most powerful tax shelter ever built, a vault the taxman can't crack open. How does one product do both? You climb. So Og's going to walk you up the ladder, one rung at a time, from 0 to 50 million, and show you the exact rungs where insurance flips from a tax into a vault. Rung 1, $0, the bottom. Start at the bottom with Dave. Dave's broke, and in most of the jungle, Dave is legally required to buy car insurance. No shinies, no driving, no job to drive to. Here's the cruel part. Dave pays the most for it. See, insurers don't just price your driving. They price your wallet through something called a credit-based insurance score. Same car, same clean record, 0 crashes. The caveman with poor credit pays roughly double what the caveman with good credit pays for the identical policy. One analysis clocked the gap at over 4,500 shinies a year. Insurers will tell you that score predicts risk. Maybe. But whatever it measures, the result is brutal and simple. Same car, same clean record. Broke caveman pays double. The less Dave has, the more they charge him to protect it. Rung 2, approximately $50,000 working. Climb a rung. Now Dave's got a job, a starter cave, a kid on the way. He's finally got things worth protecting. So he pays his premiums every single month, on time for years. Then the day comes. Something breaks, someone gets sick, and Dave files his first real claim. And he runs into the actual business model, the one you've already met if you've ever filed a claim and gotten back a flat no. Here's what insurance is. You hand over shinies every month, and the company keeps whatever it doesn't pay back out. So every claim it denies isn't a loss to them. It's profit. It's the one thing you'll ever buy that makes more money the less it gives you. That math holds across the board: health, auto, home. But health insurance is where the numbers are public, so you can actually see it. Nearly 1 in 5 claims gets denied. 1 in 5, and fewer than 1 in 100 of those denials ever gets challenged. Dave sighs and walks away. Most cavemen do. Rung 3, approximately $500,000, comfortable. Keep climbing. Dave's comfortable now. $500,000 in shinies, a real cave, savings in the pile. And here he meets the strangest product in the whole jungle. If anyone's ever pitched you whole life insurance as protection plus savings, this is the math they skipped. It's sold as 2 things in one: protection plus a savings account that grows. And it costs about 10 times more than the plain protection alone. A healthy 40-year-old pays around 59 shinies a month for a big term policy. Pure protection, nothing else. The same coverage dressed up as whole life, about 570, 10 times the price. Now watch what that extra 500 buys. Drop that difference into plain index funds instead, month after month. Over the long haul, it almost always grows faster than the policy's savings ever will. There's exactly one narrow case where a whole life makes sense: the rare caveman who's already maxed out every other tax-advantaged pile. For everyone else, it's an investment, a slow, expensive one, wearing protection as a costume. And the costume pays the caveman selling it. Rung 4, approximately $5 million, wealthy. Now the climb flips. Dave's at $5 million, and up here insurance quietly stops being a cost and turns into a tool. Start with the problem the rich actually have. When you die with a big pile, the jungle takes a cut of what you leave behind. That's the estate tax. It only bites the wealthy. The first 15 million shinies per caveman pass untouched. But above that line, the cut is 40%. 40. So here's the dodge. A life insurance payout is tax-free. And if you put the policy inside a trust, a box where the shinies technically aren't yours anymore, that payout sits outside your pile. The taxman counts your estate, the policy isn't in it, and your heirs collect millions he never gets to touch. That's the move. Insurance stops insuring a life. It moves money past the taxman into the next generation clean. Rung 5, $50 million, the top rung. And at the very top, 50 million and up, that trust trick gets a monstrous upgrade. Meet the tool the broke caveman will never even hear named: private placement life insurance. It starts the same way: a policy in a trust outside your taxable pile. But now you don't just park a death benefit inside. You stuff it full of hedge funds and private deals and let it grow. Everything inside compounds with zero tax. You borrow against it tax-free while you're alive. Your heirs collect it tax-free when you're gone. It's not really insurance anymore. It's a tax-free vault with a heartbeat attached. And it's real. When the Senate Finance Committee investigated this in 2024, it found around 40 billion shinies parked in these vaults, all held by a few thousand cavemen, a rounding error of the population sitting on a private, tax-free fortune. So let Og get this straight. The same word that denies Dave's claim at the bottom hands a hedge fund fortune to the richest heirs, tax-free at the top. Same word, opposite jungle. You're almost certainly not buying a vault with a heartbeat. Neither is Dave. Neither is Og. Most of us live on the bottom two rungs, paying the most when we have the least, collecting the least when we need it. And here's the number that should sting. If your credit's poor, you're likely handing over that 4,500 shiny gap yourself every year on the same car insurance. Not for how you drive, for what you're worth. And that heartbeat at the top? That's the whole game. A sliver of real insurance wrapped around a fortune, just enough of a pulse to make the law look away. The same product that denies a broke caveman's claim is the one that waves a rich caveman's fortune straight past the taxman. Knowing which rung you're standing on and what the product is quietly doing to you there is how you stop being its prophet. The tribe that sees the machine clearly is the tribe that stops feeding it for free. Join it, and let's climb the next rung together.